Let's take a look at some charts on Stellar from this week's article on Brave New Coin. So Stellar is positioned just out of the top 10 based on market cap when compared to other coins. And if you're wondering why Link and Tezos aren't on here, it's because for some reason I can't pull them up in TradingView. I don't know why. But Tezos and Link are sort of where the gaps are here. They're all in the mix together. XLM's kind of had a mind of its own. You can see generally, despite most of these coins having nothing in common, they actually correlate extremely highly just based on market cap, I think. I don't think it's anything specific other than that. If you look at ADA, LTC, BNB, and EOS, these are completely different chains from one another, but they track almost one-to-one. ADA less so, certainly, over the past few months. But XLM kind of hasn't tracked with anything. It hasn't tracked with the XMR Tron group. It hasn't tracked with the LTC, BNB, EOS group. It hasn't followed ADA. So if you're looking for a non-correlated altcoin play, that's one reason to jump into XLM. Not investment advice, but just what I'm looking at here. If we compare Ripple and Stellar, because essentially they're very similar. They're the closest cousins, brothers, sisters to any other coin probably in existence besides direct forks. They're basically the same. They use validators. They want to become Swift and or banking stuff and or banking to peer stuff. They have very little fees. So Ripple leads the market cap and daily transaction volume. But surprisingly, Stellar this month has crept up, especially in the fees department. Transactions per day, daily active addresses, and GitHub commits. Fees is a bit of a weird one because you'd think you'd want the lowest fees possible, but you also don't want zero fee chains because then you just get spam and nonsense that you can't really evaluate. If you look at EOS, they have multi-million transactions per day. Tron, the same thing. It's like, well, how do you even parse that? Do you even consider it the same as something like ETH where fees are astronomical right now? So you want fees to be high, especially if fees are used for chain security, which isn't the case here, which is partly why the fees are so low. There's no incentive structure here for fees to support security. So there's really no reason for fees to be high. At least that's how I see it for Ripple and Stellar. Another thing about fees is if fees are continually rising, like they are on Ethereum, like a runaway freight train, that typically says that there's a scaling issue that needs to be addressed, if at all possible. In ETH's case, they're going to transition to proof of stake, at least to attempt to do that. Stellar removed inflation, and I don't know what they're technically even considered anymore. They're not really proof of stake, but they have validators that I assume get paid something based on the active address chart because active addresses spike once a week. And currently how we sit here, non-circulating supply, so this is held by the SDF, Stellar Development Foundation, or some other person, some other entity, is 29.5 billion. The circulating supply is 20.48 billion. So there's more XLM to be dumped on the market that actually exists currently. This is going to be a slow process, much like the Ripple escrow. But again, they're the same thing. They're both pre-mines. They're both enriching the founders or developers continuously, which is fine. The market will decide if that's a big deal. Who am I to say? One thing Stellar did do is decrease their total supply from 100 billion to 50 billion, which is different than Ripple. Ripple's, I think it's like 60-40 as far as what's non-circulating and what's circulating. So Ripple's going to have more to dump continuously on the market than Stellar, but they're both going to continue to dump on the market. So it's like, what's the point? Where's the store value for either of these? I just don't see it. Based on the token supply, the tokenomics, it just doesn't make sense. Stellar's daily active addresses are way up compared to Ripple, which is interesting. Stellar does have a DEX, which I don't really know much of the details about as far as the volume or transparency there, if anyone's actually using it, but I'm guessing that's part of this daily active addresses spike compared to Ripple here. And if we look at the fees again, Stellar compared to Ripple, like I was saying, Stellar just recently spiked in the fees, and this is micro scale, so all in all the fees here next to nothing. XLM just has that many more transactions than Ripple does to compensate, when you compare the two as far as the fees are concerned. So if anything, I think increases in fees in general on any chain is bullish because it just shows more activity. even on ETH, it can be a miserable user experience. It can destroy the chain. But at the end of the day, if fees are skyrocketing, that means demand is extremely high for on-chain space, which is bullish. It just is. If we look at XLM's transaction count and mean transaction size, the average transaction size basically hasn't changed over the past 2 years. You can see that the spike is when they burned that 55 billion XLM. So that's going to forever spike this average here. Transactions have continued to rise and are in the millions now. Well, 1.5 million to 2 million, something like that. Definitely bullish to see it rise from 100 to 1,000. Again, though, with the fees being so cheap, it's hard to actually discern, are these transactions legitimate? Are they spam? Are they, what are they, right? Like, they could be 100 million, 1,000 things as far as economic utility or organic on-chain activity. But nonetheless, fees are rising with transactions per day. So there's clearly demand for space on the chain here. If we look at the NVT in the line here and active addresses in the fill, you can see what I mean with those active address spikes. Usually this indicates some sort of distribution. You see it on BAT, you see it on any coin that has a supply distribution that's constant. So active addresses are basically at a 2-year low, which is not bullish. If you look at transactions, you're like, oh, this is mega bullish, right? But I think the real story is active addresses, and they are continuing to decline. NVT looks great for Stellar in that it's the inverse metric of economic utility. So if NVT is decreasing, that should be bullish. This spike down is from that 55 billion burn because NVT looks at all the on-chain activity. So that's going to be falsely down. It's not real organic economic utility. It's just them burning a bunch of pre-mine. But if NVT is decreasing, it's bullish. If you compare Ripple's NVT to Stellar's NVT, Stellar's like 2x or 3x Ripple's NVT. Even though you can't really compare chain to chain, they're close enough where I feel comfortable even attempting to compare them. So NVT looks better than it's looked in years, but does it really matter? I don't know. Really, the story here, I think, is active addresses. And if you look at the Google Trends for Stellar, the protocol, it's just nothing, It kind of mirrors price. Google Trends will always mirror price just because that's how the markets work. There's really no other place to look into crypto if you don't know anything about it other than Googling it, right? So if there's any user demand here that's new people, it'll show up on Google Trends. If you zoom in over the past 2 years, it's just been a downtrend. So there's just been less and less searches for Ripple, how to buy Ripple, how to sell Ripple, what is Ripple, that sort of thing. Definitely not bullish. If we look at technicals here, we have VPVR, yearly pivots, 50, 200 EMA, and RSI. Daily chart on Poloniex, their ticker is STR USDT. In case you're trying to pull this up yourself and you're looking up XLM and it's not popping up. For some reason, they've not switched the ticker. Over the past few months, I was tracking this V inverted head and shoulders thing. Shoulder, head, shoulder, whatever. It's not perfect. It doesn't match the pattern exactly, but it should behave the same in that the targets are likely around 12 cents, 13 cents, 14 cents, something like that. Basically the previous accumulation period and the VPVR zone and the yearly pivot. Trend says it's bullish for the first time in 2 years. You can see the 5200 cross has been bearish until recently. So it's more confidence for more upside here. RSI is flat as far as divergences are concerned. I'd expect the next high to have a bearish divergence. And that's typically when you want to rotate out of the coin or take profits, that sort of thing, because it indicates weakening bullish momentum. Cloud also likes it. This is the 2-day cloud. So if anything, this is more bullish than the daily signals because it just captures more data. You can see since 2018, it was below the cloud, below the cloud, below the cloud, below the cloud. Oh, pops above the cloud, and off to the races it goes. So the cloud on the 2-day is extremely bullish compared to where it's been over the past 2 years, right? It's just been down, flat, finally above trend, and it has some chance at up momentum here. TK lines are close but flat, which indicates overbought conditions here. Typically you'll see price mean revert back to this red line, the Kijun, or it will flatten out and let the signals catch up to price. But I think overall this looks good for multi-week upside. Looking at Stellar BTC on the weekly chart, I was tracking this Adam and Eve ascending triangle thing situation. At the time, there was a massive TK disequilibrium up to like 1800 sats. That's closed currently, the gap. You can see that. So the general decision tree that's changing as this occurs, first you see this TK disequilibrium, and this says, okay, this is a divergence. It's a bullish divergence. It says we have weakening bearish momentum here. Shorts probably aren't going to be profitable. That's what this says. The TK lines get closer, price continues sideways, and you say to yourself, okay, we have a pattern here. We have declining volume, which is why I have this on here. This looks real. This is a bullish reversal pattern. Let's measure it out. You get a range between 1100 and 1200. We actually hit this on the candlesticks. We poked into the middle of this. So that looks good. Okay, what's the next step? Now we wait for this bullish TK cross below the cloud, which isn't necessarily a long signal, but it says that the short is definitely over at that point. This says the short is weakening, and the TK recross says the short is over. The next step after that would be this edge-to-edge trade, which is into 2021 on the weekly. Not a definitive possibility now. It's too far out to really tell, but that's what I'd be looking for going into 2021 and a few months after that, is prices above 1,000 sats starting to get bullish momentum to move up to 2628. Now the cloud's going to continue to come down over the next few weeks, but regardless, the edge-to-edge move still looks viable. Look at the daily for Stellar BTC. Trend metrics like it. It's above the 200, above the cloud. Anything between 14 and 17 would be my target in the near term if we can make a higher high here. Yearly pivot, VPVR, resistance there. I mean, it was down in 2019, 2018, just, kind of straight down. And just zooming in on this recent price action, it was kind of stuck in this range for 300 days plus and broke out, immediately created a head and shoulders, and then broke down. So typically, this pattern loosely is Wyckoff accumulation. It is a specific type of accumulation that you'll see over and over again. Doesn't match it exactly, but it's close enough that I think it should be considered. And it did break out where you'd expect it to break out. At these highs, it found momentum. But what you don't want to see post-breakout is bearish reversal patterns immediately. This is the 8 hour, so it'll look better on like the 4 hour or the 2 hour, but for alts, you kind of have to look at a lower time frame for some of this stuff just because they move so quickly and so punishingly. If you are still long up here, you just lose everything as you get back into this range, in a day. So I like to watch lower time frames on occasion, but overall I think long-term technicals look decent into 2021 for XLM. I'd really like to see the on-chain addresses pick up to get more convinced. But I mean, the long-term concern is always the overhang in supply, the pre-mine that's continuing to be dumped on the market. Because unless the market buys more than the selling, obviously prices aren't going to go anywhere. So there needs to be demand to make up the slack there.